Hey everybody, it's me, Gregory Mannarino, back from my post-market wrap-up for this lovely day. Yes, lovely day. Friday, February 23rd, 2018. People, honestly, I want you, if you're not, I would really like you to sit down for this one. This post-market report is special. It really is. All right, let's start off with this. It's incredible. Today, stocks vaulted higher. The Dow Jones Industrial Average put on like 350 points. And it's kind of funny. You all know that I like to watch CNBC and just to hear what comes out of their mouth. Well, just like 5 minutes ago, Bob Pisani, you know who this guy is if you've watched CNBC. He was sitting there and he said, wow, the stock market went up today. It vaulted higher on no news. Well, I guess Bob Pisani missed out on this, or they don't want to cover it. And I want to cover this for you. So if you were watching the bond market today, like I told you to do in the video that I did earlier today, we're talking about an epic rally in the bond market, which came out of nowhere. Look, we saw some of this yesterday, but today, seriously, someone, you know who they are, was buying bonds here literally like they were going out of style. So much so that the U.S. 10-year yield over the past couple of days dropped from a 2.95 to 2.87. Do you have any idea of the amount of cash that would have to be flooded into the bond market to cause a move like that in such a short period of time? Well, this is what sparked this. William Dudley, Fed President William Dudley, and I posted this all over my social networks, today started talking about, more quantitative easing, not just more quantitative easing. He went on to say that, well, when the economy, falters again, the Federal Reserve should be allowed to buy up more mortgage-backed securities. Are you kidding me? Well, that was a nice boost for not just the bond market, but for also, obviously, the stock market, which is the goal here. They propped up the bond market to push stocks higher. Now, Powell, the new Fed chair guy, this guy, just like I said, when I found out that he was going to be the new Fed chair, I said this guy is super dove. He's like Janet Yellen squared. I think I used those exact words. Well, this guy comes out today kind of backtracking, sounding very, very dovish. Well, 3 hikes may be in the cards, not 4, but, we got to look at the data, and the markets took off. So, Bob Pisani, this is what you missed here, buddy. Get with the program. If you're going to open your mouth on international television, you should at least have the slightest clue as to what you're talking about. Now, look, I did not see this bond market rally from nowhere. I completely missed this. I don't think anyone saw it coming because it was rigged. You know that. So, with that said, I did close my position here, SPY, with a loss of 10%, actually a 10.2% loss today. You know what? I can't complain. I honestly cannot remember the last time I've had a losing trade, and I covered them all with you. So, does this bother me? Not even one cell in my body is upset about this. What I am upset about, honestly, is the absolute in-our-face rigging that is going on here when they have to send out Fed presidents and the Fed chair themselves to, put this market at ease, say, hey, you know what? Don't worry. We got your back. We're going to prop this up from here to kingdom come. Doesn't matter. Just get in there and start buying stocks. And that's exactly what happened here. But I'll tell you, this thing with Dudley, go to Market Watch if you didn't see it, or go to one of my social networks where I posted it, is incredible. More QE and possibly more mortgage-backed securities being bought up. Are we in Twilight Zone? Are we in Twilight Zone? I'm not at all shocked about Powell's testimony today, which he's going to talk about before Congress. I think it's next week. This guy is going to take, like, the biggest light on the face of the earth, as bright as the sun, and be shining it up the crack of this market, because he is playing political games and will push stocks higher here. People, look, we do not have a real market. Let me just say this real quick. If you recall, I also did not see the bond market sell-off that sparked the last drop. I completely missed that. And I also completely missed the bond buying, like literally, they were going out of style. You know what? Look, just to prove my point, if you didn't see this yet, if you're not watching this video on my website, go to my website, traderschoice.net. There's a link right down here in the description of this video, and you will see a bond buying spree. Literally, I'm not making this up. It's off the charts. It's just incredible. And if you are watching this on my website, which I hope you are, go to the right side and look at that chart. It's too much. Let me ask you this real quick. And I know I've been covering this a lot lately. So let's see. So some entity out here, let me see, maybe it's the Bond Stabilization Fund, which I spoke about yesterday, because they're the only entity that would be buying a bond here. Think about it. So it cannot be a regular investor, because what regular investor out here, or investors, or I don't know how many it would take, how many tens of billions would it have taken to prop up this bond market today? They're willing to lock up all that cash for a net profit of 0 for a decade or longer. If you factor in the actual rate of inflation, it's probably negative. They're willing to lose cash by propping up that bond market. So you know who this is. It's just as crystal clear can be. It's just incredible, it really is. So again, if you were smart enough, and I was not smart enough, I admit this freely, to see this propping up here in the bond market, literally off the charts, eyeball explosion, I don't know, head explosion. If you were smart enough to see that, well, I guess you did really well today. I was not. I missed this. I missed this bond market rally, and I missed the bond market sell-off from a couple of weeks ago. Maybe I got to work on it a little bit. But look, it's not real. You know that. You know this is not real, people. But I'll tell you what gets under my skin. And it has nothing to do with this 10.2% loss I took on this trade, because, like I said, I can't even remember the last time I had a losing trade. It's that long, and you all know this is true, because I am the most transparent guy, I think, out here. I post all my trades, when I'm buying them and when I get out of them in real time. So it's pretty easy to put these things together. But what bothered me, what really bothers me, people, is it's in our face. They throw it in our face, how they're going to rig this market. They send out Fed presidents to prop things up, to make the market realize, hey, you know what, don't worry, we got your back. They literally get in here and start buying up bonds, inflating their balance sheet, which is supposed to be shrinking, and nobody talks about it. Like Bob Pisani. Bob, how did you miss this, dude? This was the news, Bob Pisani. Maybe this will make its way to you. That's what drove the market today. Bob. All right, people, look. Let's put Bob aside for now. All right. Bob's not even here no more. It's Friday. And I am thrilled that it's Friday, because it's been crazy. And I need a little bit of a break. I'm sure that you do too. So, as always, be safe, love each other, care about each other, be charitable, and we will reconvene in this exact spot right here come Monday. I will see you then. Over and out.